American Tower is a popular stock among a lot of dividend investors and many investors in general. It's a popular one. People own it. People believe it's undervalued. They believe the dividend is safe. This is what I'm going to discuss in this video. I don't think the dividend is as safe as you believe. And I do like American Tower, but I was talking about it last year and I said we would likely have a dividend cut. We did have some kind of a small dividend cut. I'm going to talk about it a little bit more, but the stock is sitting at $181 per share. The same price it was trading at in 2019, excluding dividend, of course. So it's going to be a very interesting video to determine if American Tower is an amazing investment at this price, or is it maybe just a value trap and it's most likely going lower. Now, a lot of you are familiar with the business model of towers like American Tower or Crown Castle, CCI. CCI is another one a lot of people told me about. I prefer American Tower because American Tower has international exposure in many emerging markets, in markets like India and many other markets around the world. They are still growing much faster than the United States in terms of adoption and many different things. So this is why I liked American Tower a little bit more. But for the business model of American Tower, it's pretty amazing. All they have to do is build the tower and pay some of their own expenses, and then they start having tenants on them. And the cost doesn't really go up much from having one tenant to two tenant to three tenant because the tower is already there. The more tenants they have, the higher the return on investment is for something like American Tower. And they do, of course, lease it to many popular players like T-Mobile, 16%, Verizon is 12%, AT&T is 13%, and they have many different operators around the world. No major expiry date in terms of the leases before 2028. So it's a pretty good maturities in terms of the lease contracts for a lot of them. And most of them will likely renew these contracts. And American Tower, as I said, does have them all around the world. Over 76,000 towers in India. They have a lot of them in the United States, Mexico, Canada, South America. A lot of places are growing over there. They have some in Europe. They have them pretty much all around the world. A lot of towers for American Tower. Pretty amazing and pretty efficient business model. The latest earnings weren't too bad at all. They did raise outlook for revenues, and they also raised outlook for AFFO per share to around $10.42. It was $10.33. So it's a pretty decent raise, and I really liked the earnings report. But in terms of the last quarter, it wasn't really shocking to me. I talked about it in my videos, but American Tower did somewhat cut the dividend. Now, if you look at the dividend from 2020, even before 2020, you could look at this graph. It has been steadily increasing pretty much every single quarter, except this quarter. It went from 170 to 162. So this quarter, it did go down a little bit, but it was not an announcement as a major dividend cut because a lot of investors believe that the dividend is going to rebound in the second quarter and then they're going to end up being flat year on year without a year over year dividend cut. So it's mainly a quarter on quarter dividend cut. I'm going to talk about the dividend a little bit more. The dividend right now is nothing impressive. It's 3.6%. But the main reason American Tower always had a lower dividend yield than most players like Realty Income was because American Tower was more efficient, a much better business model, much safer, and they were able to grow AFFO per share faster, which enables them to increase the dividend rapidly. I think the average dividend growth for it, I could put up the chart, but I think it's like 10% or 8% or something like that, around 10% or 11%. It was pretty crazy growth for American Tower, and this is why they normally have a lower dividend yield. And now you could get 5 or 5.5% in your own broker or in short-term treasuries in many different places. But now, if you want to buy American Tower, you're getting a 3.6% dividend, which is not very impressive on the surface. And the question is this dividend actually sustainable? And the second question is, can American Tower continue growing the dividend as rapidly as they grew it over the last few years? Because if they can't, then a 3.6 dividend means that this company is overvalued. And this is what I'm going to talk about right now. And if you look at the total sum of how much they paid out in dividends in 2023, it was pretty close to $3 billion in total payout for dividends. So that's $3 billion. Now for REITs, I like using adjusted funds from operations. And for adjusted funds from operations, they put up around $5 billion. So we have $5 billion of AFFO for the company, and they have 3% in dividends. That means they are left with around $2 billion of extra funds from operation to pay more dividends or mainly to pay down the debt. Now, if we look at the debt maturities for the company, this is where it gets tricky because we talked about them having an extra $2 billion in adjusted funds from operation. But for the maturities, they have $3.1 billion maturing in 2024, $3.7 billion maturing in 2025, and $4 billion maturing in 2026. And it gets even worse after that. $5.5 in 2027, $7.6 in 2028, and after 2028, they have pretty close to $15 billion maturing, over $39 billion of total debt. This is why I was a little bit bearish on AMT and CCI, because these companies had a debt problem and they still have a debt problem. Now, for the case of American Tower, if they have $2 billion left after covering the dividend, they still need like $1.1 billion for 2024, and they need like $1.7 billion for 2025. Now, fortunately enough, the company does have a little bit of cash. They have $2.3 billion in cash and cash equivalents, which means they will most likely be able to cover that expense and cover the dividend for 2024. But if we get after 2024, we go into 2025, I would start to get very, very worried about the dividend. So what this really tells me is that yes, the dividend might be safe for the short term, but for the longer term, I don't personally believe the dividend is safe. Meaning after 2024, I don't believe the dividend is safe. And from me looking at all the debts they have, I don't personally believe American Tower is going to be able to grow with a small 3% dividend at the same pace that they grew it before we had the whole thing happen in 2022, where they were growing it, I think, 10 or 15%. I could put up the charts again. But for me, so I'm not seeing rapid dividend growth, and the dividend is only 3.6%, and I'm not seeing it being extremely, extremely safe. Yes, of course, they can roll out the debt and then refinance it to the future, but that's going to really increase interest expense, and American Tower is already struggling with interest expense, and we're likely not going to have rate cuts anytime soon. So this is really going to hurt shareholders. So for me, the way I look at it, I'm not seeing the dividend being very, very safe, and I'm not seeing a rapid revenue growth or rapid dividend growth even for the dividend itself. So I'm just not seeing it. I mean, I'm not seeing the appeal of the 3.6% dividend. For me personally, I would rather invest in something else. Even VC properties is at 6%, and they used to grow the dividend at 7%, and they have pretty good metrics and much safer and much better coverage for the dividend than American Tower. So I'm not really getting the opportunity in American Tower. But if I look at the upside potential, a lot of the bad stuff is the reason why American Tower is trading at a discount. If you look at the multiple, price to AFFO per share, which is equivalent to price to free cash flow, but for REITs, is sitting around 17.5 times AFFO per share. Now, the mean over the last 10 years, it was pretty close to 21.5 times. So it's trading at a decent discount from 17.5 to 21.5. If we do have rate cuts in the future, we go back to 2.5%. I would expect it to get back to the mean of something pretty close to 20, 21 times. Maybe it could be a little bit lower, but there's a decent multiple expansion proposition. Now, for the growth of the AFFO per share, I mean, I'm looking at the analyst estimates and looking what they were able to do in the past. I would say around 5% is fair. You have between 5%, negative 2%, 7%, 4%, 6%. I would be willing to go with 5% as a fair estimate. So if we take whatever the analyst estimates have between 5 to 6%, which I believe is very fair, we get $12.85 of AFFO per share, in 2028, which is 5 years from now. We're using 5 or 6%. So we take the 12.85 and we time it by the average multiple of 21.5, which is the mean actually for the adjusted funds from operations per share. Now, if we do that, we get $276 per share for American Tower. We divide it by the current price of $181, we get pretty close to 52% upside over the next 5 years with American Tower, excluding the 3% dividend. That's like 15%. So in total, maybe 70, 75% on the upside for American Tower over the next 5 years. For me personally, this is not enough. I try to shoot for doubles over the next 5 years with most of the stocks that I own, which leads me to believe that yes, American Tower might be trading at a discount. Maybe it's bottoming out. It has a lot of bad sentiment. A lot of good things could happen. But for me, I'm not seeing the appeal of American Tower relative to other REITs and relative to other opportunities in the market. Now, if it goes back to 150, 155, I could see the potential for a double over the next 5 years with American Tower. But from here, I'm personally not seeing it. And the dividend is not too safe, and it's not likely to grow very quickly. And I see better opportunities elsewhere. So for me, American Tower is not a buy. It doesn't mean it can't go higher or nothing good could happen. But you have a lot of things that could happen in the future, a lot of unknown stuff. Maybe a lot of people talk about Starlink eventually just expanding or something like that, some new technology that we don't even need towers anymore. But I'm not smart enough to understand this area. But looking at the numbers, I don't really like it. I think there's better opportunities elsewhere. So thank you again for watching the videos. No financial advice, just my opinion as always. I hope you enjoyed it. If you did, please press the like button and maybe consider subscribing. So I hope to see you in another video.